welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Peggy Martin. Peggy is a fee-only financial planner with the Family Wealth Consulting Group. She also has another company. It's called Estate Guidance and Insurance Services. And in that company, Peggy offers a range of insurance products, including long-term health care insurance. And that's pertinent today because we're going to be talking about long-term health care insurance. So, Peggy, thank you for being my guest today. Welcome.
Mike, thanks for having me. Glad to be here.
Okay. By the way, congratulations are in order. Peggy has just been working her heart out and has finished her studies for her Master's of Science in Financial Services. So congratulations, Peggy. And I know that's coming. Yeah. So anyway.
Thank you, Mike. Thanks for that acknowledgement.
That's been a long run for you. All right, Peggy. Well, people talk about long-term health care insurance from time to time. It's kind of a difficult area for a lot of people to get their arms around. Why would somebody consider getting long-term health care insurance?
Well, there's a misconception as we age that Medicare will cover our long-term health care costs, and Medicare covers hospitalization and surgeries and doctor's visits, and also now some prescription drugs, but it does not cover long-term care. When you fall and break the hip and you're not able to totally recover from that, and you lose 2 activities of daily living, which are bathing, transferring, toileting, continence, cognitive inabilities, etc. When you lose 2 daily activities of daily living, long-term health care can come into play. The insurance coverage will be a tool that could be used that is very helpful to maintain financial well-being, as well as get good health care. The better long-term care policies offer care coordinators that help you choose from all the various providers that are available, which skilled nursing home or custodial nursing home is the best place to be, and what kind of treatment do you need? Do you want home care? Do you want daycare? What is it that you need?
Right. Okay. So we're just getting warmed up, folks. Okay. So again, what healthcare services really are covered by these policies?
Well, currently the long-term care contracts that I work with cover custodial nursing care facilities, home care at 100%. I always work with contracts where we can get 100% of the benefit for home care, for also high residential care, assisted living facilities, and also for adult daycare. So the contracts, the better contracts, can cover all of those types of care. They also usually will cover respite care, where they will give, if there's a spouse involved or an adult child that needs a couple weeks away, they'll help with the respite care. So those are the types of facilities and organizations that are covered by long-term care. The type of service, though, is you do have to lose 2 activities of daily living before long-term care will go into effect. And again, that's bathing, toileting, transferring. Can you get up from the chair and walk down the hallway? Or can you get yourself out of bed in the morning?
Yeah.
Yeah, those are all issues that when we become disabled, become harder to do. Cognitive impairment, when you develop a severe form of dementia, is covered 100%. You do not have to lose any other activities of daily living.
So if you develop dementia, then that's enough.
That's enough,
yeah.
Right.
Okay. And it should be enough.
Yeah.
Okay.
Yeah, that's a health condition that is very trying on the entire family.
Absolutely. Okay. Who qualifies to get long-term health care coverage?
Well, the basic answer to that is everybody under the age of 85, between 40 and 85, basically are the age group that would be applying for long-term care insurance can qualify. That does not mean they will qualify.
Right.
You have to go through medical evidence of insurability, which means a questionnaire is completed with the application. When the application is received by the insurance company in turn writes to the doctors to get all the medical records and review those medical records. And I have had some people approved on a preferred basis, meaning that the underwriting status went through clean. There were no issues with it. I've had some people that are approved on a standard basis, which means things are still okay, but you didn't qualify for that select rating. And then I've had people rated, but I've also had several people declined. And some of the declinations are hard to explain back to the person who's been declined. Osteoporosis is a real hard one to explain why you're being declined. But the insurance companies, based on their statistics, feel that they're buying themselves a claim when they insure somebody who has severe osteoporosis.
So one thing related to this is basically they don't want people that already have the conditions that we've talked about. In other words, if you're already in a position where you need it,
right,
you need the coverage right now, then you're not going to qualify because you have a pre-existing condition. And
correct.
So you're going to probably be knocked out from getting the coverage. So you have to be before these things set in.
That is correct.
Yeah.
A good age group that I'm finding is the ages between 45 and 60 of people buying long-term care. I have a higher success rate in getting the coverage place. It's before deterioration starts to happen to just the human body, get the wear and tear on the human body. And it seems to be a good age. Also, the premiums are a lot less at those age groups. When you get into the decade of the 70s, which I have written coverage for people in their 70s, but the price continues to go up. The older we get, the more expensive the coverage gets.
Right. Okay. So here's probably the big question that's on so many people's minds, and that is just, aren't the premiums for long-term care insurance significant? And how can one justify the expense for this insurance?
It depends on how you look at the expense of the premium. If you look at the expense of the premium as maintaining a lifestyle and also maintaining the asset base that you've worked so very hard to create, then it's easier to write out the checks to pay the insurance premiums. If you look at it strictly as a cash flow item, that becomes a big expense in the thinking.
Yes.
I recently worked, though, with a woman that was about 64, 65 years old, and we wrote a policy for her, and the annual benefit is, or the annual premium is running her about $8,000 per year. And the cost of going into a nursing care facility is about $80,000 per year.
Yes.
I haven't looked at the new statistics for 2011, but I believe they will be up probably in the neighborhood of about $85,000 to $90,000 per year. So what she said to me, well, I have the choice of paying $8,000 or $80,000. So which am I going to do? She said, I'm going to pay the $8,000.
Yeah.
And
of course, if you're really lucky, I guess, or lucky depending on how you look at it, but maybe you won't need the long-term care, but the idea is just to have the coverage in the event that you do.
Right, like many insurances, hopefully we won't have to use, if you have earthquake insurance, hopefully we won't have to use the insurance coverage, and that is a more expensive form of insurance, getting that. And I personally have that kind of coverage, and I look at it, it's an expense that I'm willing to pay to help protect what I have, and I may never submit a claim on it. I feel the same way about long-term care insurance, that it's helping me to make wise choices into the future.
Yes. Okay. All right. So how are the benefits triggered, and then how are the benefits paid?
Well, what happens, again, is you do have to have the loss of 2 activities of daily living, and you also, or cognitive impairment. You also have to satisfy your elimination period. And the elimination period is also known as a waiting period. And contracts have anywhere from a 30-day waiting period up to a 180-day waiting period.
That's half a year.
Right. And this is where the counsel of a good advisor comes into play, is what kind of a waiting period should the prospective insured have. And you really do need to look at their asset base. If this is someone who has about $500,000 in assets outside of their home, you probably are going to want a very limited waiting period where they're not having to fund out of pocket the cost of their long-term care insurance for 90 days.
Uh-huh.
Or if it's somebody who has an extremely high net worth that still wants the long-term care coverage because they have other ideas for their net worth other than paying for long-term health care expenses, you might look at a longer elimination period because they do have the wherewithal to pay for some of their care. Also, you need to work very closely with the Medicare system with regard to waiting periods on long-term care policies. Medicare, if you qualify for skilled care first before you end up having to have custodial care, and you've had a qualifying event, qualifying event is defined as 3 consecutive hospital day stays before you go into a skilled nursing facility. And the 3 days is counted as the first 3 days that you're there, not the day that you are released from the hospital. So I had an experience with my own father where I got into a fairly intensive conversation with the releasing nurse that I wasn't going to have him released yet because I wanted him to have 3 consecutive days as counted by Medicare so that he could go into a rehab facility for a week or 2 after he had heart surgery. So that's a way that'll work with the waiting period, is to work with Medicare, have a advocate for the patient so that they do satisfy the qualifying event. Then Medicare typically will pay the first 21 days 100% for the patient, and then from days 21 to 100 there's a copay. And the 2010 copay, I believe, was $135 or $137 per day. And after that, after day 100, then you're on your own.
Okay. Now, how about employers? Did they provide long-term health care as an employee benefit?